Welcome back. Now, Bajaj Finance reported second quarter results after market hours yesterday. Numbers indicated a higher stress. Abhishek is joining in with more details. Abhishek, how do the numbers look like?
Homaz, good morning. To begin with, unsecured lending for the entire BFSI space is seeing rise in credit cost as well as asset quality deterioration. So Bajaj Finance also saw stress rising, and they have raised their guidance for FY25 credit cost to about 2.05% from the earlier guidance of about 1.75% to 1.85%, which means that provisions for FY25 will be higher than what they estimated earlier. Net interest income grew by 22.8% YOY and about 5.65% sequentially. Calculation shows that the net interest margin has largely remained stable on a sequential basis. The provision spiked up to about 13.3% on a sequential basis, which led to credit costs rising further to about annualized credit cost of 2.15% versus about 2% in the previous quarter. So the PAT grew by 13% YOY and about 2.6% sequentially. The company had a one-time gain from the stake sale that they have done in Bajaj Housing Finance of about 2,544 crore, which is net of issue expense in Q2FY25. With respect to their asset quality, in absolute value, gross NPA has increased by 29.5% on a sequential basis, and as a ratio, gross NPA ratio is now at 1.06% versus 0.86%. With reference to the PNL versus RPOL, the NI is slightly ahead of RPOL, while on account of elevated provisions, PAT has come in slightly below RPOL. Back to you.
Abhishek, thanks a lot for that. We'll watch out for a reaction in Bajaj Finance. That will be an important stock to track this morning.